time for our 360 round. We're talking Oracle after the earnings that came out after the bell yesterday. And so our panel is ready. Derrick Wood, senior analyst covering enterprise software at TD Cowen, and Angelo Zino, senior equity analyst at CFRA Research. Thank you both for being with us. Derrick, I mean, there's no doubt Oracle was a darling, then it was out of favor, then it was back in a big way, hit new highs this week, in fact, and has been a great performer, 1 year up 55%. But the double miss and leaving some uncertainty with the outlook, as Bank of America says. How did you feel about the quarter and the outlook, Derrick?
Yeah, I mean, I think Oracle still is back. There were big expectations going into the quarter. The stock was up 35% since the last print. And really, it was just kind of teed up to have a perfect quarter. And there was one thing that we had seen that would maybe cause some noise in the numbers, and that was foreign currency. Foreign currency definitely became an incremental headwind that likely had an impact on reported backlog and had an impact on their guide. But when you do look at constant currency growth, I mean, they came in at the high end of their guidance. They guided in line with consensus for next quarter, which, the high end was above consensus. And the model continues to be moving in the right direction in terms of growth acceleration. It accelerated 1 point in this past quarter. It's expected to accelerate another point in Q3 and then even more so in Q4. And we still see the ship moving towards a, mid-teens kind of growth profile up from, what was a low single-digit growth company for a long time. So I think just a little bit of consolidation in the stock. The expectations were a little ahead of themselves, but directionally, everything's going well.
Yeah, understood. I want to hear a little bit about some of your target prices. Angelo, how did you feel about the quarter? Were just maybe the expectations a little lofty?
Listen, I think the results were actually, they were perfectly fine. I mean, for the most part, they kind of came in line with our expectations essentially across the board. Even the guidance we thought was perfectly okay, and kind of pointing towards that acceleration as we kind of look ahead over the next couple of quarters. And, I think the biggest issue is the fact that, hey, listen, this was a stock that kind of ran up, north of 80% year to date. It's a company that kind of provided some ambitious forward targets back, a couple of months ago through 2029, fiscal 29.
So, Derrick, what kind of targets do you have on this name? Right now it's at 176. It hit a high of 198 this week. It certainly has been very volatile this week.
Yeah, we have a $210 price target, which is about 27 times our calendar 26 EPS forecast. It currently trades at 23 times. If you look at where Microsoft trades, Microsoft has been trading around a 30x PE multiple for some time. And that's an organically growing business of around low double digits, 12, 13%. And if you think that, Oracle is going to be moving into mid-teens growth over the next 18 months, which is what we're expecting on the top line, we think there's still upward pressure to go on the PE multiple.
Okay. What's interesting about Oracle, I mean, what do you think the strength is here for Oracle in comparison to the competitors, Derrick, as you think about the opportunities for getting to this $210 price target? What's going to drive the growth quickly, Derrick?
Number one growth driver, OCI, which cleared 50% growth last quarter, beat our estimate by 4 points. It is accelerating. The main workload that OCI is doing right now is training AI models, large language models for company. They want to deal with Meta. Recently, they're helping OpenAI and all the major foundation models because they have the best architecture, the most scalable and the most cost performant for training large language models and rolling out superclusters. They announced a 65,000 NVIDIA supercluster data center, which is a huge breakthrough. And we just think they've got differentiated technology versus the other cloud vendors when it comes to AI training.
All right. Thank you for that. Angelo, what's your target and what do you see for Oracle in 2025? I mean, they sort of got back to their leadership position. Tell me a little bit about your guidance for 2025, the drivers and the price target.
Yep. So 12-month target price, we actually did increase it to $189 and basically shifted to 2026 estimates where we apply a 25 multiple on that estimate, and essentially kind of we look ahead here, and we do see taking place here. What we don't like as far as and why we have a hold recommendation for Oracle, the biggest reason there is is going to require an immense amount of capital on their side of things. They actually had negative free cash flow about 2.7 billion on 4 billion in capex this quarter. But the capex is going to, the free cash flow is going to come back significantly here in the current fiscal year versus the prior fiscal year, given the need to kind of double capex spend. We think the capital intensity is going to be extremely intensive here over the next couple of years to fund that growth strategy out there. And then when you kind of look at the balance sheet out there with a net debt position north of 75 billion out there, we think that's going to limit any type of multiple expansion north of 25 times. So we like the growth story for this company. We like the fact that they've kind of moved away from this kind of low mid-single digit kind of legacy oriented type of company to one that actually now has a growth driver attached to it with their kind of infrastructure as a service business. We see opportunities also on the application software side of things, but kind of all said, for us, it's more the valuation side of things where we see limited upside given kind of the capex needs in the future to fund that business.
All right. Thank you both. Thank you for making Oracle so exciting today and seeing opportunity in a sell-off here as well. Angelo Zino, CFRA Research, Derrick Wood, TD Cowen. Derrick, Angelo, thank you.